Despite a minor fall on Dalal Street this week, India outperforms its global peers. Friday's gain of 2% helps cut its weekly losses. IT, realty, metal fall the most. On this week's edition of Editors Roundtable, we decode the week on Dalal Street. We tell you how markets around the world reacted to Trump's trade tariffs. We put the spotlight on the IT sector earnings. And we'll tell you what to expect from the rest of the sectors. I am Reema Tendulkar. With me, Prashant, Nimesh and Nigel. And joining us in the newsroom, we've got Mahesh Patil, CIO, Aditya Birla, Sun Life AMC. Hi guys, TGIF. What a week, right? What a week. It's historic in terms of headlines, gyrations, volatility, the bond market meltdown.
In a strange way, today actually seemed slow. Because it was just one way. We started higher. It was not like zigzag.
Yeah, we had a gap up and then we've just stayed there.
Yeah. Because the last few days it's been up 7, down 8, up. So today was calm, and I hope it stays like that now for the next few days.
Quite a roller coaster ride for us and global markets.
Well, that's right. Normally you could say I went home and I didn't look at the screen at all. You'll be lying if you said that this week, because you had to look at the screen at all points of time.
1 or 2 days, Prashant would have not even slept overnight, right? I mean, so much of Trump announcements, watching all the bond market and all.
No, I'm telling you, Nimesh, it reminded me of all the 2008, and back then, of course, I mean, it was different, but it had those vibes for 1 or 2 days, and quickly it passed quickly. So,
but here, this time there's too much of uncertainty.
Too much of uncertainty.
There it was like right. I mean, you don't know what to expect. I mean, that was the biggest challenge.
The biggest in that sense, the head fake was that headline which came on Monday. It was right. They said that they're going to pause. Markets went up low to high. It went up 8%. Right. And then, of course, within 30 minutes, inside of 30 minutes, there was that news which came
that is fake.
That it is fake news. So now people are wondering whether it was actually fake or it was a trial balloon by the White House to see how markets would react. And now actually, they actually went ahead and did it. But
I mean, bad for traders, I would guess, But I think it's a good opportunity for investors, right, long term, because you get prices at levels, right, where you want to buy.
So you shop, Mahesh, at a fund house. You'll have been buying. What have you been doing in this volatility?
Yeah, so I think in this volatility, I think during the market fall, I think steep fall, I think stock prices, which normally good stocks, right, they're out of your reach sometimes because of valuations. I think this is the time to buy those stocks because, see, your market value of a stock doesn't change, right, because by 1 or 2, 3 quarters, even for 1 year, the earnings are slightly, right, because a lot of value comes from terminal value. And that, assuming that picture is intact, say a 10% correction or 15% is a good opportunity to buy.
Right.
So what have you been buying?
No, so I think we've been looking at some of the domestic plays, whether it is consumption, for example, while it has been a underperformer in the last whole year, we think that this year, it can look better because rural economy is starting to look up better. Monsoons are going to be good, right? There's some stimulus in the budget for the tax relief next year, the pay commission. So look at sectors which have been underperformed in the previous days, not much of a froth over there. And where they could turn around, I think those are the sectors which we would look at. But I think it's more stock specific.
All right, Mahesh, before we throw a few more questions to you, just want to give our viewers a quick check of what went on during the week. We started the week looking at Black Monday that turned into Green Friday by the time we ended. And we ended the week more or less flattish. At the start of this week, if you told someone we'll end flat, well, they would grab it with both hands. India outperformed amidst all the uncertainty. And the FIs, though, they remain sellers. The good point is they're net short on the index. And that could be a bit of a cushion because that's what helps you with a bit of a short covering bounce, even if flows are negative. The sector of the week was the consumption pack. As Mahesh said, various people are turning positive on that pack. It's been an underperforming space, consumption, FMCG, but for this week itself, it was actually an outperformer. The Nifty ended with a mild negative tinge, while high beta, metals, real estate, they got a bit of a pullback during the course of the week. What works for India? Now there is increasingly, some kind of confidence building into the Indian equity markets after a while. Remember, for India, it's not the first month that we're going through a bit of a downturn. We have been in a broad 9-month correction, actually, a time-wise correction. So we're relatively protected from these US tariffs because as a percentage, the US goods, the goods that are exported from India to the United States is only 2% of our GDP. Services hasn't been touched as of now. And Trump's commentary as well is not indicating he's going to be very harsh on India. Can't trust what's going to happen, but at least as of now, those are the positives. RBI actions seem to be focused more on growth, which is good. Earnings are expected to compound by around 12 to around 13%. And SkyMed, they came out with their forecast. They're saying that this monsoon is going to be normal, which is actually good. and it could help some of these consumption names as well in the time to come. So India is looking better, Mahesh, and we take heart from the...
One thing which you missed out was the oil itself, right?
Yeah. Oh, that's another big
That's from $80 average of last fiscal year to around 60. That's almost like a 20% delta, which is almost like $15-20 billion, right, of savings, right,
Indeed.
which is there. Which gives some fiscal room for the government, right, which is a bit of a challenge.
Mahesh, earlier, when we just started off the show, we were talking about 2008. In 2008, we had that spell for around 7-8 months where things were very, very weak, and then you had the Lehman crisis, and in the next 5 months, the equity markets actually started looking up. Right. This time around as well, it's not the first month that we're seeing pressure. Actually, we've gone through 8-9 month, corrective phase. The Indian markets have lost only 15%, but it's been a painful last 9 months actually for investors here in India. Do you think in the next few months things will actually bottom out and then turn around? At that point of time, we didn't have President Trump, so you don't know what he's going to do next. Yeah. But do you get a sense of that?
That's very interesting what you said. In fact, that's what we've been saying. India pain started much earlier. Because of our own problems. Right? Yeah. We had a large fiscal contraction because of the elections, right, which was there. The monetary policy also was fairly tight. I mean, a lot of restrictions on the banks. And we saw that pain actually in last fiscal year to some extent, right? And some of those things are actually easing off, right? Whether it's on the monetary side, I think we've seen now the new RBI governor. We've seen 2 rate cuts, right, already. And liquidity, in fact, at the month of March, normally when it is very tight, we had actually a neutral.
Yes.
Or a slight surplus which was there. So I think at least the monetary is trying to support growth, I think, which is a good thing over here. And a lot of the earnings downgrade for us has already happened right, this year. I mean, last fiscal year, I mean, we started off with around 15-16% for the Nifty. We'll probably end at around 5% or so, right? In other markets like US, now the downgrade cycle will start now. I mean, they're still sitting at around 10% kind of a growth for this year. So I think we have seen that pain and taken that, and we were about to recover, right? And that's what we're expecting. Because of this global turmoil, there might be a few setbacks in a few sectors, but I think we should see I think next year, as we step forward, growth on the lower base should start to look a bit better, right? And valuations, which was the biggest concern last year, right?
Has cooled off.
Nifty has now pulled off in probably a Nifty at least now it's slightly below, I think, the 10-year average.
And, right? And the FI is selling as well. In various markets, They didn't sell so much. Here they were actually selling for quite a long time. And maybe if US is not as strong as people thought, that maybe some of those flows makes their way into some other markets.
I'm just looking at some data. So FI's ownership in India, right? They are now
at a multi-year low.
Yes. So they are underweight by almost like, I think, 3% underweight vis-a-vis the emerging market, which is like what they had during the Asian financial crisis, right? So I don't see there is enough room for them to sell. So I think once the dust settles down, you don't know when it will happen, but there will be a trade out from US, right? I mean, this is a trade short US, both dollar as well as US equities. And it could move into emerging markets, wherever there is a better growth. And India would still have a better growth, right? If not 6.5%, even 6%, for next year. I mean, this fiscal year, that will still be a good growth. I would say that you might see that coming in. It might take some time, not in this volatility, but that's another kind of way to look at it, right? If you want to be positive, these are the positives which one can look at this point in time.
So Mahesh, from that perspective, for the benefit of the viewers, do you think 4-5% downside from here and India see a base there around 21,000 on the Nifty? Is that
I would say,
your base case?
I would say, one never knows, because I think the worst thing is the US gets into a deep recession, right? There's a tariff for Chinese, they use currency as a war, and then it's a different scenario. But another base case scenario, I would say, that's even at these levels, it's becoming an interesting market to look at for investing over the next 3 to 5 years. Clearly, I think you will make normalized returns.
Sorry.
Go ahead.
Mahesh, just one thing. Friday, I mean, today we saw a big move, right? And on the way higher. Do you think it was just repair, or do you think, I mean, the correlation with the US starts to break down a little bit here? Or do you think we're kind of still dependent on what happens in the US in a large way?
So I think if you look at even in this volatility globally, I think correlation was much lower, right? I mean, if you look at across. I mean, if you look at what happened even in the Asian markets or even in the European markets, our walls were much lower in that sense, right? So that clearly shows that we have got something which is working for us on the domestic side, which is not so much correlated to what's happening in the US. But clearly, I think there is some impact to growth which could be there. And people are trying to factor in whether that impact is going to be 50 basis point, or what if US GDP growth goes down to around, say, 0% or so this calendar year, by the end of this calendar year. You might have some impact around 50 basis point to our GDP growth, but that's about it. I think that needs to get factored in a bit in terms of earnings. But I would guess that to some extent, I think India could actually emerge beneficiary out of this, right? As you mentioned, right? I think we would probably able to, we have been classified under the not so, I mean, those 4 categories which he has got, right? So where he will be slightly more lenient. And we might, for the first time, actually benefit. Okay, we talked about it eventually, right? If China, right, if clearly the way things are, I think they will not be able to, supply, to the US at those tariffs. So in certain sectors, okay, if we are able to really scale up, we could actually benefit in the longer run. I mean, currently there could be demand impact, but that's how I would look at it.
Many industries could benefit. I'm just going to take a minute to go back and recap the big global moves that we saw. And it really is, these are historic moves. So guess what the average daily swing in the last 4 sessions on the S&P 500, largest equity index in the world, has been? 7.8%. Wow. Daily average over the last, and we'll find out what it is today. What about volatility? So if you take that April 2nd as a start point, which is what Trump said, Liberation Day, when tariffs were announced, the VIX is up 143%. You can go back and compare GFC, the Greek debt crisis, and many other crises. I mean, the only time it's been this high or has gone up in such a dramatic fashion is COVID. Otherwise, I mean, this move has dwarfed everything else. Bond markets, again, since April 2nd, Liberation Day, and this is where the problem is. The 2-year is flat. The 10-year is up 26 basis points. The 30-year is up 35 basis points, which basically means that the long end is rising, signaling rising term premium, equity risk premium, which I think is what people are kind of at the margin worried about. The dollar index, which is the broader dollar against a basket of currencies, it slumped 4.5% since the 2nd of April. And now, of course, it's at 100 or slightly under 100. The dollar is not behaving like it should. I mean, neither are US bonds. I mean, in times of extreme stress, people go into US assets, which is not happening. It's not happening the dollar here is lagging, even the US treasuries in that sense. Basically, the question of safe haven status is coming up once again. What about China? 145% tariffs by Trump. The Shanghai Composite is down just 3% week on week. I mean, this week. So that's quite incredible, of course. But authorities are taking measures, and they're out there. I just took one other country, South Korea, which is very exposed to US in terms of trade, etc. Again, historic week. Inside of a week, that market was limit down, then it was limit up. So it's never seen before. So basically, from fear to FOMO, if I can sort of call it that. A few commodities, gold fell 5% high to low from the 2nd to the 8th. It's bounced almost 8%. It's back at all-time highs. Mahesh was talking about oil, 16% fall, high to low, in 6 trading sessions. And I also looked at the Bloomberg Commodity Index, which is a basket. That's fallen 9% in that same stretch. And maybe now it'll start to come back up a little bit. We'll see. That's it. I was on a lighter note. I was, saying earlier that every crisis needs a name. We had the global financial crisis, GFC. The last one 2 years back was SVB, Silicon Valley Bank. There was, pigs crisis, Asian crisis, Greek debt crisis. What should we name this one?
Mahesh?
You can call it a Trump
tariff, TD. Trump tariff. Yeah, TD crisis, Trump tariff.
Yes.
So I put one out. It's called, I'm calling it global trade crisis. There's no Trump.
Yeah.
But if you slip in global, Trump trade becomes GTTC. Doesn't have the same ring to it. So we'll need to find a...
Yeah, I think people remember this for the kind of a short period kind of volatility which we saw, right?
Yeah.
That is.
I think high to low, about 18% fall, actually, for the US.
Right.
Which is smaller than what we saw during COVID and previous instances as well. Short-lived, hopefully.
Right.
And I think the worst is behind us.
I think this still has to unfold, right? We don't know, right? Because it's still not over in that sense, at least globally, how things will, what are the implications are there? Nobody knows actually, right?
Yeah. So two years later, when we look back and say, what happened in GTC?
No, I think you want a bettering maybe Trump's tariff tamasha. triple T, no?
It's actually tamasha because the way flip-flop happened, right? I mean, that's it.
No, Prashant asked for a better ring, so I said,
T-Cube.
Anyway.
All right, moving on to the other T, TCS. So just before that, TCS came out with the numbers. So on one hand, after the 20% correction in share prices like TCS, Infosys, even the Nifty IT, valuations now getting to long-term average. In the case of Infi and TCS, valuations have now dipped below the 10-year average. So that's on one side. But on the other hand, is that there is no growth. You know, Jefferies is now anticipating TCS to grow its top line by 2% from FY25 to FY27 and its EPS by 5%. We're talking about low single-digit revenue growth from FY25 to FY27. So, you know, that's the picture. Valuations may now be looking cheap relatively, but then there is no growth. So what should you be paying for? Also, perhaps investors will wait and watch for Infosys. That's the next catalyst. Now, Infi comes out with its numbers on 17. Now, you know, before it became a tamasha crisis, there were expectations in terms of guidance. 2 to 4%, 1 to 4%, 2 to 5% at best case for Infosys in terms of an annual guidance. But now the street is feared that will they guide at all, given the uncertainty? And if they don't guide, that means for 3 months or more, you will have no idea what IT companies are growing at. So that is an added uncertainty. And we just quickly pull up the earnings calendar. Next week, Wipro, Infosys, Bastec. And the following week, HCL Tech, LTI, Mindtree, Cyient, LTTS, Emphasis, Persistent, Tech Mahindra, basically the rest of the IT pack. And some key lines from TCS's interview this time. Well, clients aren't panicking. No major deal cancellation or ramped out, but they are seeing some tactical there are some delays in decision making or some tactical ramp downs, as they called. They're pausing on wage hikes. So that's a bit disappointing for all, employees as well. They will decide, they'll take a call when to give wage revisions or increments this year. But they continue to hold on that FY26 will be better than FY25 if you strip out the BSNL, majorly for their international or their developed markets. But Mahesh, come in on tech. What was your positioning? Has it changed in the last 2 months?
Yeah, so tech again has started to underperform even before this, right? Because of concerns about US growth and other factors. So we had been positive on tech earlier, right? Because the sector, which had underperformed. And we were expecting that this year, I mean, say 6 months back, we were expecting, last year was not a great year, right? In terms of the top line growth. So this discretionary spend should have been good, but that is now kind of a turnaround. But I think beyond the point, I think the tech offers some kind of a support because a lot of these stocks which you talked about, right, while the growth is going to be very, very weak over there, they are, compared to the earlier cycle, if you look at it, and now the cash flow generation is much stronger. Yeah. Right? If you look at prior to 18, the growth also there was around in the mid-single digits, right? This time around the cash flow dividend payout, so the dividend yields in some of these stocks, large names, are around 4 to 5%. So that provides some kind of a support. Obviously, that at least gives a downside support to some export. That doesn't mean that you might see a big outperformance. So
you're still positive on IT? I mean, you're
we are kind of a neutral-ish. Neutral, we are neutral on that sector, right? But I would not go too negative. No? It's already there because it will be too risky to really bet down. Obviously, the mid-cap and small-cap, I think that shift is yet to happen. Mid-cap IT stocks, some of them are still very expensive. Yeah. I think that is a space where you might see some derating.
Mahesh, what kind of valuation you will give as a fund manager to IT companies? Because as she pointed out, 2% revenue growth, 5% EPS growth.
Right.
And a lot of the large cap companies are still quoting about 20 times 1 year forward, Reema. Yeah. So as a fund manager, what kind of valuation you will be comfortable with? Or are you comfortable with this?
No, I think it's, again, if you look at the FMCG sector, just for example, right, there also the growth is kind of similar, right? Yeah. I mean, if you're looking at the volume growth is around like 2% or so, I mean, for lever it's much lower, right? But you're looking at earnings growth of around in high single digits, right, over there. Again, these are also companies which are giving high cash flow and good dividend yield. I mean, so there the multiples are...
You're comfortable with this kind of valuations?
We are okay. I mean, now with this, with a 10-year average, slightly below that, probably a slight down it could be there. I don't think... the valuations is a question at this point in time. Yeah?
And plus, there is an angle of high dividend yield. Like a company like TCS pays 100% of its profits out to shareholders.
So 4-5% dividend yield is what is for most of the large
if we are in a low interest rate environment,
I would not go short on this sector. Let me put it this way, right? It might not be a great thing. It might, but that's how I would look at it.
Okay, we'll hold that thought. We'll get into a very short break. We'll come back and tell you what to expect from the rest of the sectors in terms of earnings.
Welcome back. You're tuned into Editor's Roundtable. Well, before we move on, the key focus in the next few days and for the next 45 days is going to be earnings. Nimesh, tell us, what do we expect from out there? Couple of companies you're focusing on as well. Run us through the list.
Well, Nigel, at the headline, do not expect any fireworks. That's the broad message from the Q4 earnings. So expect contraction across all the sectors. The revenue growth will be 4-5%, but there will be margin contraction for the first time in 2 years across the board. So the margin expectation is just 0.5% to 1-2% for most of the companies. So that's the kind of margin contraction we're going to see in this quarter. The number to watch in terms of the Nifty EPS for this year and next year. The average Nifty 50 EPS for FY26 is around 1145, 1150-ish for 26 and around 1300 to 1315 for 27. So that's a number to watch out. Will there be further cuts in terms of the full year EPS for next year and year after? So that's something which only this quarter earnings will throw up for. In terms of sectors now, which are the sectors which are expected to report weak numbers? Banks will report weaks because of NIM contraction, because of the rate cut. So that's one big sector to watch out for. There would be some outliners is what I believe there. Commodity chemicals is something to watch out for. There will be some inventory pressures. Demand is still muted. And there will be a bit of an operating leverage concerns as well. So that's the commodity chemicals sector. Construction material also expect a weak quarter this time around. And across the board, oil and gas, those are all expected to be weak numbers. So that's a broad 4-5 sectors which are expected to be weak. In terms of strong earnings within the financials, watch out for NBFCs. They are likely to report good numbers. And even for MFIs, the feedback is you will see probably the last of the worst quarters as far as the MFIs are concerned. So that's the one sector which can report good. Healthcare will also expect to report good numbers this quarter. So all those hospital names and all should report good. Metals and mining, the expectation is on a weak base, they will report good numbers. So that's a sector to watch. And telecom is another sector to watch because ARPUs have been increased. So watch out for the likes of Bharti and Indus Towers. For Indus Towers, there's going to be a bit of a dividend play as well in Q4. So they may announce a large dividend payout. So that is something to watch out for. So that's broadly from a sector perspective. Citi puts out some interesting stocks where they expect positive and negative surprises in the earnings. In terms of positive surprises, HDFC Bank can surprise positively. Varun Beverages, that stock was up in today's trade. Citi is expecting 13% volume growth. So one will be the good, strong growth numbers for Varun this quarter. Tata Steel, Citi is expecting strong. Voltas and Eicher are the other two names where Citi expects a good Q4. So that's from a positive surprises. In terms of negative surprises, Titan can surprise negatively on lower margins, and there could be cuts as well in the next year estimates. So that's something to track. Within the IT, watch out for Coforge. That's been the best performing in terms of growth, but now expect some decline there in Coforge in Q4. It could be a quarterly thing, but watch out for that. Vedanta weak, ICICI Pru Life expect weak, and M&M there could be a bit of risk on the weak mix for M&M. So these are the few stocks where Citi expects a negative surprise. But at the margin, no fireworks, a flattish quarter with a margin contraction the first time in 2 years. That's the overall summary.
A lot of the questioning and commentary will be
a key to watch.
Yeah.
Tariffs will come up in conference calls, Mahesh.
I don't know whether they have the answers.
But, we were in the break, we were talking about any sector particularly which, according to you, has got dislocation, where price is as compared to opportunity. And I think maybe you like chemicals as
I think this is a sector which has underperformed, right, for a long period of time, almost like 2 years now, right? And there was inventory build-up which was there, and that was taking time to kind of go down. While in the near term, because of the global disruption, it could still be impact. But I'm looking at more slightly longer term, right? Again, coming out from China. China is still a large part of the global chemical trade, right? Almost like 28% or so. India is around 5% or so. So whether India can take a larger share, I mean, it's been a talk about it for quite some time. But now probably there is more reality to it, right? Because this war between US and China is not going to end immediately. It is a long-drawn kind of an affair. So that probably poses some opportunity for Indian companies, right? Because you will be more competitive, right, vis-a-vis this thing. So that can be a sector to watch out for. Okay. Even for that matter, even textiles, right? Again, a relative competitive position vis-a-vis say Vietnam, this thing, okay, where the tariffs could be much higher once they sit on the negotiating table. So these are opportunities, I think, which can emerge
for play out over a period.
Even in exports.
Okay, it's been a great conversation, Mahesh. Look forward to having you more often with us in the studio. Thank you. Newsroom.
Thank you.
Thank you. Well, we're off for 72 hours, but we'll be tracking all the news, the Trump tariffs. So keep it with CNBC TV18. We'll join you bright and early on Tuesday morning. Thank you for watching the show.